Felix here. If you watched the last version of this video, you will be surprised that this one has slight glitch there on the technicals. Thanks for watching. Anyway, a lot of you watched, literally 1,000 people watched a completely mute video. Was it an improvement? Well, let me know in the comments below. What's this all about? Well, the rally is in full swing, even though it's calming a little bit halfway through the day. But what is the Fed going to do about it? Is this something they want? Is this something they like? What's the reaction? That's what I want to show you. Before we do that, if you have any interest in making a heck of a lot more money and would like to work with me one-on-one, I take 2 more one-on-one students this month. So check it out, felixfriends.org/coaching up there. And the real highlight is that this isn't financial advice. No, we got great disclaimers, marvelous disclaimers, and even better free benchmarks. You see these 2 here, felixfriends.org/NASDAQ, top 100 NASDAQ stocks, all the fundamental data, and then Goldman Sachs top 15 buys at felixfriends.org/15. Get your paws on them and make some money and know why you're making that money. Now, you are probably aware that the core PPI came in at 0.2%. That is much better, half what we were expecting. That's brilliant. The month-on-month, the negative data, that's just energy prices. You know, oil and gas fell like 20% month-on-month, so that isn't particularly surprising. And then also jobless claims are up moderately. I mean, 8,000 more people unemployed in the long term than last month. So that's kind of, neither here nor there. But the Fed is, while on holiday, knocking back martinis on the beach in the Hamptons. They have responded. Fed President Kashkari came out of the ocean wearing nothing but Speedos. And he said, prior to the pandemic, the central banks, he was the most polished, the most dovish policymaker. And he said, he wants the Fed benchmark interest rate to go to 3.9% by the end of the year and 4.4% by the end of 2023. So this whole idea that interest rates are going to drop in the first half of 2023, which is the market's pricing in at the moment, he's basically saying that's gobbledygook. Yeah, gobbledygook, there I said it. So the Fed doesn't like this, and there is a reason for it. The gas prices have dropped from $5 to $4 a gallon, right? Still not quite sure what a gallon is. Is it 4.8 liters or something like that? I think so. And this chart here isn't the price. This is inventory, and it's dropped to the lowest level since 2017. Why? Because gas prices just got cheaper. So everybody ran out and filled up the tank. And what does that mean? That means less supply, and therefore prices might be ticking up again. Look at rent prices. They're up 14% from a year earlier, 14% increase in average rent prices. If you live in Miami, it's apparently 39%. Miami is apparently where everybody wants to go. Orlando as well. Is it all about Disney? Everybody wants to be close to Mickey Mouse. Mickey Mouse responsible for inflation. There we have a culprit already. Now, renters are basically not going anywhere. There is a 97% occupancy rate. Amazing if you're a real estate investor. Always better to be an investor than to be the renter. But what is this jobs numbers malarkey about? Is it really as good as we thought it was? Well, right now, we're here. Last year, we were there, the dotted line. And that shows you that, well, if I can zoom in a bit more, it shows you that we're still at about half the number of freshly unemployed people that we'd like to have. Well, maybe not like to have, but then we had last year. And the longer-term unemployment number is still here below 2 million, whereas last year it was around the 3 million mark. So it's still a huge drop. The labor market continues to be incredibly tight. I promise you, that's what Jay Powell is going to say to you in September. Now, the bond market is in open warfare with the Fed. The Fed futures are predicting 65% of the market is basically saying rates are only going to go up 0.5 percentage point in September. Only a third of the market still believes in that 75%. That was the other way around a week ago. Seriously, completely the other way around a week ago. And for November, we are really challenging Jay Powell. We're basically saying to him, come on over here if you want some of this. And we're saying a third of the market betting on a 0.25% interest rate hike. So really moderate stuff. Half the market at 0.5. So that together, if you take that together and you could draw one of these. I've always struggled with these. Yet I managed to make 100% returns. You see, you can have pretty basic skills and make a lot of money. 83% of the market believes the rates are not going to go up more than half a percentage point. And that is essentially saying to the Fed, we've called your bluff. We don't think you're going to do what you're going to do. What do you think the Fed's going to do? Well, I think the Fed's going to come out swinging, because the whole thing depends on the market believing the Fed's going to come out swinging. So if they don't, it's going to be problematic, and the whole thing is not. It's going to shift even further down, and financial conditions are going to lighten even more, loosen even more. The rally is going to continue, and all of that. The Fed doesn't want that because inflation is still here. It hasn't really changed. It's just that energy prices have come down a little bit. Now, one thing that hasn't come down at all is our options portfolio, which continues to make us bucket loads of money. Here we go, 105% up so far this year. We're actually up another $2,500. I need to update that spreadsheet. I'll show it to you. It's a thing of beauty. About 220 trades so far this year. Here they all are, and we continue to make small amounts of consistent profits month after month after month after month. And I enjoy teaching the 2,500 students that I have very, very much. And anybody who literally has an interest in getting an extra income stream, maybe dropping the shackles of their employment that they loathe or whatever it might be. I've got retirees, I've got mechanics, I've got all sorts of people from all walks of life who just have one thing in common. They just want to make more money. Is it rocket science? No. How much time does it take? 2 to 3 hours a week. And there you have it. How can you make 2 to 3 hours a week? How can you make that kind of money with anything else? I really don't think you can. So check it out. There are 2 ways of joining us. One is the Master Options program here, of course. Freedom is the coupon code there. And the other is, as I said at the beginning, if you are of the ambitious caliber, then check this out, Felix and Friends coaching. I take a very small number of people. I coach one-on-one. We have about a dozen people on our group calls, and then we do lots of one-on-one calls. And it's just fantastic. Like literally one of my students who started live trading last week, he made $9,333 last week. And I think he's up to pretty much the same number already this week. So it's just fun. It's just joyful and really fantastic people. It's such an amazing community. You didn't just learn from me. You learn obviously from my coach, but also from me directly, and then from the community, quite frankly, who are marvelous, just marvelous people. So if that sounds like fun to you, definitely sounds like fun to me. I very much enjoyed teaching, and I enjoy seeing people succeed. That's really what it's all about. But you go check it out, Felix and Friends coaching. And if you enjoy these rambly macro updates with or without sound, then do let me know in the comments, and I'll keep them coming. Thanks very much.